let me start recording now. It has
Okay.
started recording. Let's just delete this and start over again. Uh, let me delete that. Yes. Let's start now with wave principles, okay?
Yeah.
Yes. In Elliott wave, there's 5 waves. There's a 1, and then there's wave 2, and then wave 3 and 4 and 5. As you can see here, the impulse wave here,
Yeah.
right?
Yeah. Yeah.
Yes.
Yeah.
Always it starts with 0. 0 is always at the bottom of the trend. You say 0, and then you go up there'll be a 1, and then price will come down, maybe 50% or 61%, sometimes even all the way down there to create a 2.
Okay.
And then after a 2, it creates a 3. After 3, it creates a 4. After a 4, it creates a 5. That's the market structure. It happens everywhere. This is for an uptrend. In an uptrend, it would look like this. And then in a downtrend, it would look something like a 0 would be here now, a 0, a 1 here, and then a 2 there, and then a 3 here, and then a 4, and then a 5. You see how you do, this is how they look like, right?
Okay.
And then as I was saying that, let's just write this down. Uh, wave 1 is always 30 to 70%. No, that's no, I'll just fix it to 70%. Yes, of wave. Sorry, this was supposed to be wave 2 is always 30 to 70% of wave 1. And then let's just copy this,
Okay.
and then we do that, paste it there, and then we say wave 4 is always this principle also always applies of wave 3. Yes. And then there's a principle which says if wave 2 is deep, wave 4 will be shallow. And if wave 2 is shallow, wave 4 will be deep. Yes, let's put these here. Okay, let's try move this over here and put these here. Can you see them, or should I change the color? Okay, yeah, black seems more. Let's increase the size to yes. These are the principles, right? That
Okay.
you need to master these principles of wave counting. This is where now you'll be able to know what wave you're in, which wave you should get off, and everything like that. Now, wave 2 has an ABC correction. I'll teach you what an ABC would be: 0, and then A, and then a B, and then a C. Let me add waves to it so that you can see what it looks like. Yes. In order for you to get this 2, you have an ABC correct type of correction, which looks something
Yeah.
like this. I zoomed it in so that we can be able to at least get an idea of what I mean. Wave
Okay.
2, yes, it has this. And then within this wave 1 here, let's do this. There's also 1 here, and then a 2 here, and then a 3, and then a 4, and then a 5. Let's reduce the sizes of this one. Let's use it intermediate. Yes, it looks something like this. Within this wave 1 again, there's also these 1, 2, 3, 4, 5s inside here to give us one big one. Every time you complete 5 waves, there's you call it a big one now. In this
Okay.
case, this 0, 1, 2, 3, 4, 5, when it's complete, it gives us this big one here. That's the market structure. That's how the market moves. What they basically be doing to people that are trade, let's say supply and demand only. right? A supply and demand maybe trader would have maybe their demand somewhere here and then maybe their supply somewhere here, right? This is how they trade. They'd say if price moves from here, they buy. When it gets there, they sell, right? And
Yeah.
then what the market makers do to these people that only trade supply and demand, they'll take the price there, and then once it starts coming here, it's selling. And then people tend to think that it's going to come all the way to this bottom. And then
Yeah.
when you sell hard from here, I said within this two, there's also this series of an ABC. So this ABC
Yeah.
thing is also inside here. So what the market maker will do will take price somewhere there, and then you start selling, and then it will come drop like this, and then it starts going back up. When it starts going back up, what do these people tend to do? They start selling hard here again, and then it comes down like this, which is okay. And then because it has not reached down here yet, they'll tend to think that if price comes back here again, they're going to sell. But once it gets to this point, what do? It breaks past this point, and then it will take stop losses of people that are over here around the
Okay.
zone. It'll take stop losses and start going up. And then when it starts going up like this, people start to say, look for these series of a high, a low, a higher high, all these type of things. And then they'll tend to say, this is now an uptrend, right? They'll start saying buying from here, buying, and then starts going up. And then if this it reaches this three, it starts to correct. When it corrects, uh, it can come down even lower than these guys' entry points here. When it does that, people tend to freak out and tend to start saying, it looks like it's going down, let's sell. They start selling here, it just comes down here, collect stop loss. People have maybe their stop losses around here because they'll say this is an SR flip, right? Support and what.
Yeah.
Sometimes it will even come down deeper, collect all these stop losses that will probably be put somewhere around this zone now. It'll collect these stop losses and then start going back up again. And then it's just a series of how the market is played. That's how these guys play the market. So in this case, we're going to start measuring all these things using the fib retracement. The fib retracement will always give you where maybe a wave ends. In fact, let me do this first. Yes, it will give you maybe where a wave ends and all these things. You
Okay.
said you're familiar with this Hanzo QML stuff, right?
Yeah.
Yes, you're just kind of familiar, right? In this case, what we have here, we will have something like you know, where market, we know we enter here, it goes up, it comes down here, we enter from Elliott wave.
Mm-hmm.
Yes, Elliott wave gives you this thing. You already know it. So when you can see it, you just add maybe the Hanzo strategy onto your Elliott wave to make it just more perfect and to understand maybe where wave three, this impulse wave, where it will start, and then all you know is that it's going up there. So you'd never really care. You just protect your trades. You put your stop loss maybe somewhere around here. You enter, it starts going up, it will create these one, two, three, four, fives, but it will never come down to the entry point. It will create a one and then a two, three up here, four, and then five here again. It will create this
Okay.
structure down inside here.
Okay.
Yes, it will create something like this inside there. I'll just take this for here. Yeah. In this case, it will create something like this. So all you be doing, you just keep on moving your stop loss. Since you enter from here, price is going up, you take your stop loss, you move it somewhere here, it bounces back, it still goes, or you start re-entering here again. It goes, you
Okay.
re-enter because we know our take profit is at the top of three. We'd have our
Yeah.
take profit around here because we know that when it gets there, we can enter now another sell all the way down here again. And then we wait for another buy here all the way to the five. That's how market structure really works. Like that's how the market structure is. I'll just show you in the proper charts, but here I'm just showing you the basics so that when you get to the charts, you can kind of understand what I'm talking about.
Yeah. Yeah.
Yes. So in this case, when we have a one, we use this retracement tool. Fibonacci, you'd find it here. This is called trading view. Oh, sorry, I forgot to tell you this. Trading view as a platform where you can just do analysis and a lot of things. It's free. All you do is just register with your email address. From time to
Yeah, I'm
time.
registered on trading here.
Oh, yes, that's amazing, I guess. Yes. So here you come to the Fibonacci retracement. Retracement is you come here, right? Pick fork. Usually it's always at pick fork when you open trade. So you click here and then you get down to Fibonacci retracement. This is it. So we check the as I said, I'll show you back at that message that I had written. Would check retracement. Retracement, how you use it, you start from the bottom of the trend to the top of wave one. It'll give you retracement percentages of where prices retrace. Let me just do this first and then bring something here. Okay, let's do this. Yes, let's bring this closer here. Yes. Remember I said wave two is always 30 to 70% of wave one, right?
Yeah.
Yes. In this case, you'd measure wave one so that you can get an estimate as to where wave two is likely to end. Keep something in mind. Wave two sometimes can retrace even 100% like that. It's still normal.
Okay.
Yes.
Okay.
So, but most of the time, I'll show you where I put my take profits and stuff. But yeah, it would look something like this. It will have an ABC also inside. It will have a 0 here, and then an A, and then a B, and then a C that is coming down like
Yeah.
this. Yes, that's how
Yeah.
price is. So what we do is, I learned something when I was kind of learning this Elliott wave and mixing it with QML. I started understanding what maybe a full margin entry is, how these guys they draw full margin, they call them QML shadows and all these things. I wanted to understand how these guys can pinpoint such drawings without having to draw Elliott wave and all these things. So in this case, what you see here, you see also it's creating sort of like a QML structure. A QML structure, it would look something like this. Remember, I said there's 1, 2, 3, 4, 5s in here. Let's try put these 1, 2, 3, 4, 5s. 1, 2, 3, and then 4, and then 5. What it would have, it would look something like this. What they call QML is just this.
Yeah.
This is what they call Quasimodo, whereby
Yeah.
it will create a shoulder here, and then a deeper A here, and then a B, and then a C all the way. It's just
Yeah.
simple: a high, a low, a higher high, a lower low, and then the entry point is here. You go down here.
Yeah.
Yes. So this is basically what it is. And then now let's add sorry, let me add the Fibonacci retracement. Retracement, you measure the top of from the bottom of from the bottom here, and then you take it to the bottom of wave one. It doesn't necessarily have to be pinpoint like this because we want just to be able to see. You can also just put it at the side as long as it's at the same point where wave one would have ended, which would be here, right?
Yeah.
Yes, and then you'd measure the retracement. You'd check. Usually wave as I said wave two, right? Is usually wave two is always 30 to 70% of wave one.
30. It's always 30
30%
to 70.
of wave one.
Yeah.
Yes, but let me add something. But it. But okay, let's put it down here. But it can go to 100% retracement.
Yeah.
Yes, it can also be 100%. It's possible because we can't control the market. What we want is to always get the best out of the market behavior. We don't even care of what the market is trying to do. We just look for the perfect entries, the nice stuff like that. We just want that. Because if you
Yeah.
try to control the market, that's how you're going to lose money because you want to tell it to do something, but we can't do that. All we can just do is just
Yeah.
speculate and watch what the market is doing. Yes. So as I said, is wave what is 30 to 50%. So usually where A is, where price when it gets to that one, it starts correcting, it's coming down. It comes to a decision point. What we have, let me remove, should I remove all these numbers, right? I think we can already see.
Yeah, yeah, yeah,
Yeah, so that we can be able to, yes, let's remove all these other things here. Okay, yeah, A is just okay, yes. Wave, wave 2 has ABC also, 3 waves inside ABC, right? Within this ABC, wave A always bounces off a decision point. Decision point is always in a Fibonacci retracement, how it was measured. It is always in between the zone. Uh, sorry for that. I think, I don't know, it's too faint. Let me just add a bit more color. I like my stuff in yellow because yellow is a very bright color and it's loud. So yeah,
it looks beautiful too.
yes, very, very beautiful color. And then yes, A is always at the decision point. This is what, if you see my charts where I write something like DP, let me put caps lock and then I write DP.
Yeah, decision point.
Yes. If it's written DP, you know it's a decision point. Decision point is always around the zone 30, I think 23% and 30%. This is where wave A usually bounces off.
Okay.
So usually, even in price movement, when you check it out from here to here, it's always maybe 1% of price movement or 60 to 70% of price movement. If you have a sell here of maybe even a lot size of 0.2 from here to here, excuse me, if your account is in dollars, you'd probably have maybe $10 in profit to 15. Let me say from here to here, it's about $10 to $25 profit with just
Okay.
one position from here to here. So in this case, if you have 4 positions of 0.02 from here to here, you have already made $100. And then you can be off
Yeah.
that trade and say, I don't know if I should wait for this B or whatever. It'll be up to you because most of the time, even when we say it retraces between 30 to 50, sometime it could just come back and retrace at this point. And maybe you're trying to hold your position and then it starts going back up and then you would have made a loss in this case. So I
Yeah.
like to take my profit within this A and then let this B play out and wait for the perfect buy all the way up. That's what I like to
Okay.
do. Yes. So as I was saying, wave C is likely to come back around these zones here. This is the first take profit is always at the decision point.
Okay.
Yes, and then your second take profit, if you are holding, sometimes I hold my trades. Your second take profit will be at the 50%, 0.50. This is the
Okay.
50%. And then your third take profit will be at the 61.8 because it's still within this range. You remember 30 to 70 is
Yeah.
still within this range.
Yeah. Yeah. Yeah.
Yes.
Yeah.
So your third take profit will be here. And then you can also have a fourth take profit depending on the market behavior.
Okay.
Yes, yes, it would come here. And then after that it will be validating for you. Let's add back these 1 2 3 4s, 1 2 3 4 5s. It will be validating for you maybe a bottom QML. You remember a bottom QML looks something like let's remove the Fibonacci retracement. A bottom QML looks like maybe something here and then a low there and then to come bounce off here. Let's remove this yellow one here. Bottom QML would look like their entry point would be somewhere around here, whereby
Yeah.
price will bounce off. So in this case, if you have
Yeah.
already measured with Fibonacci retracements, you know that you have taken your profit somewhere around here, which is also another
Okay.
bottom QML around here where price could retest. So what you have beautiful entry points all the way to the top there, all the way to the top of this tree here. You have beautiful
Mm.
entry points, yes. So
Mm.
if you entered here and it goes down, you can still hold your loss or you can decide to close your loss and say, let me just wait for it to do whatever it's doing so that you can be able to enter maybe at the bottom QML or whatever it's called and all these things. ELLiOTWAVE will always validate for you that. Let me delete all these colors again. See, I deleted that. Yes, this one. Yes, and then delete that one. Decision point is here. at the 30%, which would be the first take profit, second take profit, third take profit, fourth take profit, right? And then
Yeah.
how you find wave three. Let me show you how you find wave three, how you project wave three, and then how you project wave five also. I'll just show you that in a minute. When you're projecting wave three, we use what is called a Fibonacci expansion tool. We'd come
Okay.
yes, we'd come here, and then this is it, Fibonacci base trend. Sorry for that, trend based Fibonacci extension. That's the one we use.
Yeah.
Yes, we take it.
Mm.
You start at the bottom of wave one, right? Fibonacci is always used only to find the top of wave three. Only
Okay.
you start using that one when you have a wave one and a wave two. That's when you only use that one.
Okay.
Yes. So you put it at the top of wave one and then bring it down to the bottom point of wave two. It will give us wave three. 3 years. Three in this case is always here at the 161.8%. I'm leaving it like this because price also sometimes does this. It can break slightly
Okay.
above this and then come retest. So
Okay.
all you have to do is just wait for price to see how it reacts around this zone of the 161.8%.
Oh,
You'd mark it
okay.
something like this and say, at this yellow point, I'm expecting price to do a correction of wave four. It needs to
Yeah.
come down to give us a wave four. But keep in mind that wave three sometimes it's at 161.8 or even at the 261.8. It can come here sometimes. If let's say the market is very strong or it's a very bullish trend, a very bullish market. In this case, sometimes three is not really respected. It would leave maybe a candlestick pattern or to say a supply zone whereby price would just basically a rally base. Have you heard of rally base drop type of stuff?
Yeah.
Yes.
Mm.
It would leave maybe a base here where to do maybe a rally base rally. So what would price do? It would
Okay.
just go break past this to give us that, and then three sometimes would be all the way up here. And then because we had left a base there, price will come just
Yeah.
correct at the four here, at that base that it would have left, and then continue back its movement back to where we're heading to that five.
Okay.
Yes, I'll show you all these things in market examples, like proper market examples. When we draw this
No
euro
problem.
board, it will definitely show us these things. So yeah,
Okay. Thank you.
yes. So yeah, when we get here, you know what, now this is where my wave three is. I can sell at any point here and put my stop loss. Usually I don't put my stop loss. I just let price react. I'll also show you how I get perfect entries, what they call a full margin or a shadow entry. I have also
Yeah.
discovered, I've studied Elliott wave to a point where I also managed to discover what a full margin entry is, how you can actually get it off the full margin entry using Elliott wave. So I'll show you that
Okay.
also in real market examples so that you can be able to see it for yourself.
Okay.
Yes. So here you'd have this point as our wave three. It comes down here. It has also this AB. Okay, let me remove that Fibonacci expansion. It will also have its zero ABC inside. It will also
Okay.
have this inside to the four, and then also this five would have a 1, 2, 3, 4, 5 inside.
Okay.
Keep in mind, yes, just wave two and wave four are the only ones with corrections with these ABCs. Wave two and wave four.
Yeah. Yeah.
Yes. Uh, so now we have gotten the basics of drawing wave one and two and three, right? And then keep in mind,
Yeah.
wave four, now we're trying to look for the retracement of wave four. Here it says wave four is always 30 also to 50 to 70% of wave three. But in the
Mm.
books, if you read in the books, they'll say that it's always 30% to 50%. But what I've
Okay.
realized is that sometimes it even goes deeper than 50%. So I've given it the principle to say 30 to 50%.
Okay.
Yes. So we take it from the bottom of wave two because we're just trying to measure the retracement of one wave. The bottom of
Yeah.
wave two at the top of wave three, and then would have you see it ended here around the 50. So we usually expect price to start turning off at this point, at this zone, at the 50, because we know that in the book it says 30 to 50%, but sometimes it
Okay.
can go even deeper to here or even here. This now
Okay.
depends on how deep wave two was at first. If wave two
Okay.
maybe wasn't this deep, or maybe it was, maybe let's say it was this deep, then we know that wave four is going to be a very deep wave four. But
Deep.
keep in mind, wave four cannot surpass the depth of wave two.
Okay.
It can, it doesn't have to, it can't, in fact. That's the first rule. That's another, not the first, but another rule.
Okay.
This wave four cannot come and surpass the start of wave three, which is the bottom point of wave two. It can't surpass that.
Okay.
So in this case, this wave would probably end somewhere here. If it's very deep, it would have to end here
Yeah.
and then goes back up there. If it does surpass
Okay.
this, if it does do something like this, then you know that
Mm.
it has invalidated Elliott wave rules. So what we do is sit and wait for the market to now give us a proper understanding and direction as to what to do, because we do not want to trade any market that we do not understand what is happening. Because if
Yeah.
it does
Yeah.
this, it will not give us this 5 here. It won't give us this complete
Okay.
5. Yes. So we
Okay.
always look for
Okay.
perfect waves and perfect impulse waves like that.
Okay.
Hello. Yes. So it would end somewhere here, and then you'd have it around here. I'm recording something. Hi. So yeah, sorry for that. So yeah, it usually looks something like this. You'd have it at your first take profit, in this case, where there's an ABC, zero. Yes. Yes, I'm watching something. Sorry for that. In
No
this case,
problem.
yes, in this case, it'll come off a decision point. As I said, decision point is always at the 30. Sorry, I deleted the wrong thing. Let's delete this yellow one so that we can get other, yes, and delete this yellow one also. Remember, I said 30% and 23% is always the decision point. So in this case,
Yeah.
it bounce off around this zone. The zone here to give us an A, and then a B here, and then to come give us a C. This would be your first take profit, and then your second take profit would be at the 50, and then this would be your
Yeah.
third again, and then this could be your fourth take profit. You see around here, this is where
Okay.
price kind of ended, yes. And then you have another
Yeah.
buy all the way to that 5. That's the market structure. Uh,
Okay.
yes. And then now, predicting where 5 is, usually, this is a secret of finding the full margin entry. I'm actually giving it to you for free. But yeah, you start from the bottom here, all the way to the top of wave 3, and then all the way to the bottom point of wave 2. Let's put it down here to give us another project. I'll show you these things in real life market. If it's like this, 5 is always at the 161.8 if it's a full margin entry.
Okay.
Any when you get this uh, anywhere in the market, when you have done a 0 at the top of wave 3 and the bottom of wave this, and it gives you this, put your sell limit there. You put your sell limit here. Sell limit there. This sell limit has no stop loss at all. I'll show you in the market. It's something I discovered by myself. That's why I managed to call my strategy ELLiMODO. So every time at this point,
Okay.
before price does anything, what it will do, it will always come down to this, to an like the 60% of price movement. So in this
Of the
case,
whole price movement.
yes, it always does that. That's sweet money anyway. Sweet money always. You'd take a bottom point of wave 1 all the way to that top of 1.16218 you'd have measured, right? To try discover the first decision point. We're looking for
Yeah.
the first take profit is always at the decision. This is what we want.
Okay.
This is the
Okay.
sweet money. This is what I call the sweet money, the easy money. Anywhere, I'll show you even in the markets. You get your validation from what I'm doing here. It's just proof. I'll prove it to you on in real life charts that this thing is actually happens almost all the time, and it has happened for a very long time, and it still happens. Uh, Here, every time when you sell from here to here, you have it will depend on what lot size you use. If you use even the craziest lot size, your stop loss is probably slightly here. If we use a risk management item just to check risk management, let's say for short position, it would look something like this. This is more than enough risk in any market.
So,
It's worth taking the risk anyway, because
yeah.
your profit is always big compared to your loss. If you have a loss,
Yeah.
if you have entered let's say 042202020202, four of them here. If you have entered times 10, I mean times 4, what you have is a loss of maybe $20. If you have $100 account, it would be a loss of
Yeah.
$20 from here to here, but your take profit from here to here would give you $100 profit. It's facts only. I'll show it to you also in real life charts. It's always facts. That's how I trade. It's facts. No matter what, from here to here is just $100. And I know anyone would love to make $100 anywhere in the market. And that's like using 02s. Now imagine if you're using a big lot size, let's say lot 100, and then you had money in enough money to hold that loss. If you
Yeah.
enter from here to here with a lot size of 100, that is enough to keep you fed for like the next 5 years or even 10 years.
Yeah.
That's just fact only. I'm sure if you're aware of that, you can also be like, oh, okay, that's something I can actually venture into the strategy. But anyway, yes, I think now we can now hop into like the chart so that you can be able to see all these things that I have been drawing, all these explanations that I've been putting to you. Let me remove all these messinesses of the chart. And let's remove this. Okay, no, that's okay. Let's just remove that too, and also that, and take that over here. Let's remove these black lines so that we just left with just basic wave counting. The chart looks like it's a downtrend, so I'll just show you. Should I show you from the downtrend also, like the whole starting
No, no,
all
no,
over?
no, 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 no.
Okay.
It will be same process.
Yeah, same process, just backwards. Yes.
Okay, no
Okay.
problem.
Yeah. Okay.
I will get it.
Okay. No problem. Let's just. Okay, we can delete. Let's just delete everything and just start off now from here. In this case, remember I said that when you start your wave counts, you always start at the bottom of a trend, right?
Yeah.
Yes. Uh, so here, what would mark the top points of the wicks, right? We mark there, and then we mark the bottom point also. We mark the zone. Yes. And then we have this structure. So it looks like we have a sort of like a supply and demand up here type of situation.
Yeah.
Yes. It's just simple stuff that I think anyone can be able to see this one. Yes. It would look something like this, just a basic supply and demand. So remember, we always look in a trend, we are trying to look where the wick has ended, the wicks have ended, all these type of things. Elliott wave, we start at the bottom point of these supply and demand points. It's always at the bottom. We can't start a wave count over here because If we started here, this broke through the starting point. So it becomes an invalidation in wave count. So we just hop off that market and try to understand from another different point as to what is happening or what has happened.
Okay.
Yes. So in this case, when we're looking at the euro odd in the monthly aspect, it looks like a downtrend because this is the highest wick point of it. So this is where we would start our wave count. So all this information that is here, we don't look at it much. We look where we are looking for this. This information over here will only be valid or will only be used now when we start drawing our QML zones, our QML points, our lines, and all these things, looking at previous price actions. Yes. But before, when we start our drawing of Elliott wave, we don't really care about this price for now. We can totally forget about everything that is on the left side because there's also there's this point which is now the highest point where price looks like it could have started. If let's say we had said it started from here and said this is our 1, 2, maybe our 3 there and all these things, it will become invalid because now at the top here, it came back and broke past this point, the starting point of wave 1, which is impossible in Elliott wave when you have when you're trying to discover like the main trend, the market structure. Yes. So in this case, we know that we are looking for price from this point all the way down here. So we'd now go to a weekly so that we can try to get off 1, 2, 3, 4, 5s. I can already see them, but I'd like us to go to lower time frames so that we can be able to see. So from monthly, we always go to the weekly. We start from monthly always. That's how I analyze monthly, breaking it down, breaking it down, breaking it down, breaking it down, all the way until we get to maybe the 4 hours and 30-minute charts, so that we can now basically understand what we are doing because we now have the overall direction of the market and everything. So in this case, we can see it's a downtrend from the top to the bottom, right? Yes. We look for wave count. We look for wave counts. Okay, let me just, yes, okay, this is enough. In this case, this is the highest point where the wick has been. So I'll start off my counting. This would be my 0. I'd look here. This is my 1. I'd look here. This is my 2. And then I'd have to measure. Maybe 3 is around here. Maybe 4. And then, okay. And then 5 maybe would be around here. Let's just unzoom. Yeah. It would look something like this, upside down in wave count, right?
Right.
Can you see it?
Yeah.
Yes. And then if we have a full now 1, 2, 3, 4, 5 wave count, we tried now to say, because we have managed to draw these things with the naked eye, let's try to do use now Fibonacci tools to actually see if all this writing and all this drawing of the naked eye is actually correct. We now expand everything so that we can be able to see. We look for the Fibonacci retracement, right? Always start from the bottom point to the top of wave 1, Fibonacci retracement. Now we look for where price has retraced. Price has retraced around the 70% zone, which also even went higher. Remember I said it can also go higher or even at 100%. In this case here it has done that. Then would have this now validates to us to say that, okay, looks like this is our 2 here. You remember I said there's an ABC correction?
Yeah.
Yes. Okay, now let's delete this Fibonacci. This is the decision point. Price came here and then it bounced off here, 30% here zone. You can see around the zone it came and then went slightly above, then went all the way down. So in this case, we'd have our 0 here, and then our A here, and then maybe our B slightly here, and then our C all the way down there. Let's remove this retracement tool so that we can try to see it. It would look something like this. This is the weekly aspect. We can even go to the daily so that we can, let's go to the daily so that we can see this detailing here properly. We go here, we go to the daily. We're just looking for this point, that first point. Let's just, okay, okay. Yes, this is the point we're looking for. Okay, just hold on. Yes. Would have our 0 here. I think now it's safe to remove the waves, the little red lines, right? Let me just try remove those so that we can be able to draw these things properly. Sorry for that. Okay. 0, A, B, and C. Yes. This is our 1 at the top here. This is our ABC. We try to use now the Fibonacci retracement again so that we can be able to see it properly. It will give us this point. You remember I said 23 to 30%. This zone here is our first decision point.
Yeah.
Yes. We look at it this way and see it. Oh, okay. It bounced off straight on the decision point and came back now here and then started heading back all the way here. So our first take profit, imagine if we had bought from here. This is just the daily aspect, right? Yeah, price does move like this in a week or in 2 days. So let's try see how much pricing. This is 5% in price movement. This is enough money to buy, I don't know, if you have used the biggest lot size or whatever, this is enough money to free you of whatever debts that one might be in or whatever life problem or life crisis that one might be in if you use a big lot size. So yeah, that's my strategy. I take my first take profit is always here, but you can hold and always take your profit all the way down there and something like that.
Yeah.
So let's go back to the weekly point that we can be able to look for the 3s and 4s and everything. Okay, let's delete that. We just have a 1, 2, right? We are looking for this 3. Would use now what? A Fibonacci trend-based extension. Yes, where you take it from the bottom point to the top point here, all the way to this bottom point. Remember, I said it's always where? Around this zone. Now, if price is very strong, there won't be any retracement made. Like here, there wasn't retracement that was made valid enough. So it went and took this one, this point of the 2168. So it shows that at this point, price was very strong. So we take our 3 as this one. Price was very strong for it to hold as maybe a 4 here. So it just took this point as a, so it broke past this point. So initially you see Fibonacci expansion shows us where our 3 is. And then remember, wave 4 is usually 30 to 50% of retracement. Would take the retracement bottom point of wave 2 all the way to the top point of wave 3. Where is it retraced? Around the 23%, which is a decision point. It is very valid for price to bounce off around here to give us a 4. So in this case, I never like to buy or do anything around the 4s because 4s are very confusing. I prefer to buy having to sell from here. And when price usually retests here, I let it go because sometimes it can even retest even all the way somewhere here, look for QMLs, all these things. So yeah.
Okay.
Yes. Let's now remove the Fibonacci expansion. We have our 3 and we have our 4. Yes. And then within this 3 and 4, right? I want to show you how my strategy is. I want to show you something. From 3 and 4 all the way to 5. Remember I said within all impulse waves, there's another 1, 2, 3, 4, 5 in order to give us this complete 5. Yes. We'll have to draw those ones again. We'll take this bottom point of 4, right? because it's now on this point in this trend. This is the bottom point of this trend, of this price movement. Yes, we'd say 0 here, we take our 1 here, we take our 2 there, and this is maybe our 3, that's maybe our 4, and that's our 5. Let's just try reduce the sizes of these and use maybe a different color. Yes, blue is okay. Yes, it would look something like this all the way to this 5, right? And then we try to measure it again. Okay, we have 1, 2. I never really measure this using the Fibonacci retracement because you can already see that if this is 1, this is already retraced probably 60 to 70% in price movement, which is, yeah, I can just show you that. You see 60% of, yeah, that's okay. So we take the Fibonacci expansion to check if this 3 is valid. Bottom point, top point, here again. Where is it? 161.8. So this wasn't our 3. We take this one to be our 3 here because it's around the 161.8. Yes.
Okay.
And then
There
this,
is now.
yes, and then this becomes our 4 because if we always want this to be our 3.
Okay.
Yes, we can't take anything that else is below that. But at the same time, I feel like maybe this is our 3 because I just randomly did drawings. Let me try expand and show you something. You see this bottom point here, because the chart is zoomed, they give us it's like when it's zoomed, it expands the Fibonacci also, a type of thing, so that it doesn't look valid. So what we want is we always want this point to be around the 1. You see, we want a whole complete 1 like that. So we take this Fibonacci and try bring it down all the way to where 1 is. 1. If we were to zoom this thing, you'd find that maybe this is just a 1, and there's an 1 here, maybe here, and then this is just an A, and then this is a deeper B, and then this is just a C. If we're to zoom,
I don't get this one. I don't get this one.
Okay, yeah, okay. Let me just show you. I'll show you. It would look like a 0 here, and then an A, and then a B, and then a C. I forgot to show you that sometimes B can also go above because this is stop loss hunting. In this case, what they are hunting for would be hunting for money for people that maybe they said they're entering from the zone, and then they would have their stop losses at the bottom, at the top point of maybe wave 1, right? Our wave 1 will likely be here. So if you enter here and say that your stop loss is usually above here, I think is usually below there, these guys are going to take you out with this long B, and then you'll start thinking that now this is now a sell. Let's start selling. You start selling. They give you this nice wick to look like it's going down, and then when you just forgetting yourself, they bring out this big candlestick to take you out now totally from you saying you're buying. Let's look at this. Let's do this. Let's do that, and then let's go down to, so that I can explain it more in detail and you can see it. Let's go to a daily. I think a daily would have more detail about that. Where is it? Yes, here's the point. We are looking for this point here, right? Let's make it more faint so that we can be able to see through that. Yes. And then let's remove this ABC so that we can be able to see. This is where our 3 is, that's our 4. We're looking for this point so that I can be able to show you there's actually 2 here at the bottom point. And I had said this is our 1 here, A, B, C. Yes. Now, it's on a daily, right? Let's go down to a 4 hour so that you can also be able to see. I want to show you this proper detailing so that
No
you can,
problem.
yes, so that you can be able to get it yourself also. Let me try and zoom that. Where is that? Sorry, my piece is kind of taking long to recover the information. Okay. I don't know why it's taking long, but yeah, it should start showing all these candlesticks all the way down there. Let me try refresh my page and see. Okay, let's do this first. Mm. How long has it been? How long has this recording session been?
Now,
Uh-huh.
I don't know. I can see it on my computer.
Oh, okay. Now just okay. Now
The-
just
me-
okay. Let's just refresh this page so that it can show better because it's taking forever.
Maybe you can do what you have to do today, and maybe it's 11:28 now. So
Yes.
maybe we can have
Another
uh,
another
20
session
minutes.
tomorrow. No, I'm fine with
Yeah,
any.
another.
Yes, I'm fine with
Okay, okay,
anything.
okay,
Yes, so I can
okay,
just be
okay,
showing you up until maybe if my chart manages to go
okay,
back. Okay, I don't understand why it's
okay,
taking so long. It's very rare that it does this, but anyway, let's just go back to the daily and try to look for that point again.
okay.
It's failing to get detail. But in here, there's a whole series of I can see let me try show you what I can see. I see a 0 here, I see a 1, I see a 2 here, I see a 3 here, I see a 4, and then I see a 5 here. Let's try
Okay.
let's try and make them smaller and of different color. Okay, let's say okay and then do that. Yes. Inside that's what I see. And then if we're to measure, you remember I told you that how to find 5. Bottom point of wave
Yeah.
1 all the way to top point of wave 3 all the way to the bottom point of wave this thing.
Two
Yes, of wave 2
for the zero float trading.
for the zero float entry. Yes, would look
Zero
for it.
float entry.
Yes, would look for something like this. You remember I said we bring when it's zoomed like this from a big chart, the Fibonacci expansion usually doesn't give us the full point of 1. So we'd have to drag it
Yeah.
slightly here to the 1. Always at the 61.8. This was a zero float entry. 161.8. Remember I told you 5? So I guess no, this is
Yeah.
our 5 initially. So that can't be. So this is correct. This is our 5. Yes. And then we'd have our A, B, C. Oh, it's actually clear here. Then we'd have our 0, A, B, C.
See.
Then we can try and measure this whole wave 1 and to see. Let's do this. Top point here to the bottom point. Where has price bounced off? Exactly at the 23% decision point.
Yeah.
You can
Yeah.
see. And then from here, since this is a daily, we try to measure the pips that we would have gotten within those 3 days of that day. It would be from here because we had a zero float entry. It would be here to here. That is 2% in price move. That is a lot of money. That is a
Yeah.
lot
Yeah.
of money. Yes. And then now imagine if you take this buy and then you wait, or you even take this nice sell here again, and then you wait again here because we know ABC correction is always at the
Yeah,
60.
yeah, 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 yeah.
So we just wait for our simple money. That's how it always looks like in Elliott wave. Let's delete that. Yes. Okay, now let's re-add that and delete this Fibonacci extension. Yes. Then you'd have that. You have a zero float entry that, okay, down here, and then at the 100% point of it. Yes, it would be here. Here. Perfect pinpoint entry. No stop losses needed for this one. I always tell people that when I enter a nice trade, going to my decision point, I don't need a stop loss.
Mm,
I just go all in and just wait for myself to create my $100 and then I'm out. And then I'll wait for price to come here again.
mm.
Then I'll wait for my nice sell, which would be a long one here. That's basically how I do my trading.
Okay.
Yes. So let's just delete that. And then we have a 1, 2, 3, 4. Okay, let's delete that also. We don't need, yeah, we have a 2, 1, 2, and then we have our 3. 3 would be here. I still have a strong feeling that this is my 3, because if I was to measure this point to this point, this would be my zero float entry. Let me show you again. Remember, you say
Okay.
bottom point of wave 1, this wave 1 here, all the way to the
Yeah.
top of wave 3 here, all the way to the
Yeah.
bottom point of wave 2. You remember we are looking at for it to come here at this one because it's zoomed in. So we bring it down there. Where's our zero float entry? Here. Smart again. Another sweet entry. Another sweet.
I don't know why you move Fibonacci now. You move it upside.
Oh yeah, it's upside down now. Oh, sorry. Let me
Okay,
just.
okay.
Okay, let's do this. What don't you understand so I can explain to you? Okay, let's remove these 1, 2,
No.
3 because they kind of distant.
Mm-hmm.
Yes. Yes, it would look like this. 1, 2,
Yeah,
right? Yes.
yeah,
We take it from here
yeah,
to this top point here to this
yeah,
bottom point, right? It will give
yeah,
us a wave 3. Remember, I said
yeah,
that we are looking for this Fibonacci. Let's do this. We are looking for this Fibonacci retracement to be at this 1, because we
yeah.
can't measure something at this point because it's not valid. Let's make it slightly dark. We can't do it at this point because it's not valid. We're looking to measure the whole continuation of wave 1. So we always need it to be at 100% when the chart is
Okay.
maybe on a daily aspect or zoomed in. But on 4-hour charts, I'll show you again. And 4-hour charts, we don't usually need to bring it down because it's always kind of pinpoint right there.
Okay.
So yes, so in this case, let's bring it back here, top point. And we are looking for it to be at the 100% zone because it's big detailing. It's on a daily candlestick. So our 3 will always be around here. So we take it,
Yeah,
we can say 3 retests here.
yeah,
So 3 went slightly above. Here it is, went slightly above, but still from this point all the way to that point, it's,
yeah.
yes, it's sweet entry.
4.
This is why I always say that this would be yes, exactly 4. Thank you very much. Our 4 would be here. Yes. So in this case, I always say that you should always wait for price to tell you what to do.
Yeah,
Do not try to tell price what to do, because in this case, if one had entered here and said it's a buy and price went down here, you would have lost a lot of money.
yeah,
Yes, because from here to here, that's another 3%. That's a loss in money. And we
yeah.
don't want such losses. We don't want that,
Mm,
honestly. Yes. So we know that if I take this point again, the top point of wave 1, and bring it to 3, we are looking for the zero float entry. We bring it back where? I'm sorry for that. To this 100%. We bring it here again. drag it here to the 100%. Where is it? Here. We measure now our zero float and would like our price. This is why I don't like big supply demands like this whole yellow item here. But I was just doing it so that you can basically understand.
Yeah.
Yes. So you go to the 161.8. I always have my supply and demand so small that it's amazing. People tend to say, how do you have your supply that small? I just draw something this small and say that is my whole point. I don't care about this whole big point because if I sold here to here,
Mm.
I'd be in a lot of losses, unlike just having that exact pinpoint entry.
Okay.
So in this case, we have at that 161.8. I put my stop loss usually slightly above and then slightly below that 161.8 just in case.
Yeah.
And then we can zoom it in. We can zoom it in. Let's delete this yellow box. Okay, no, let's just reduce it in size and try to draw a straight line now. Yes, a straight line would look like this. This was the perfect entry.
Okay.
No need for stop loss. You just enter and forget. Go eat food, go buy, forget about it. Look at what it
Okay.
is. Look at what it has done in all this time. Had I entered
Yeah.
this trade from this point, if I was trading around 2012, I would be in stupid money even right now. I'd be in stupid money. So remember, I said, uh, okay, let me do this weekly. Let's go back to the weekly. Um, we are going to continue this chart, I think, tomorrow so that or we can just finish it up and then we can start it again tomorrow. I don't know. Anything is fine with
No
me.
problem.
Yes. So in this case, we have our one hour.
Maybe we can have another meeting this night. No problem for me.
No problem for me. Hey, I don't
Are you
mind anything.
sure?
I'm definitely sure. I don't mind. I don't
Okay.
mind.
Okay.
Yes, we can
Okay.
have another
Okay.
one tonight.
Okay.
So in this case, we'd have our 0, 1, 2, right? And this is our 5.
Yeah.
So let's just
Yeah.
put it in text. Let's not use the. So this would be our other big one. You remember I said everything has 1, 2, 3, 4, 5 waves inside.
Fine. Yeah. 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 Yeah.
Yes.
Yeah.
So
Yeah.
this would
Yeah.
be our other one now. So what we know is
Okay.
that if we have a 1, we need to have a 2.
Yeah.
Yes. So we'd measure this whole point to check the retracement of this. This is basically a whole retracement of wave 2 from this point to where oh, wait,
Yeah.
from here to where prices ended. Price ended around there. That's just a basic correction of wave 2. So what you do, we measure it from the bottom point. Again, remember Fibonacci retracement. We want to see
Yeah.
it from this point now all the way to the top of wave 1. We check where's our first decision point. This was our first decision point. You remember
Yeah. Yeah.
30 and 28. This is the first decision
Yeah.
point. So in this case, we'd have our 0 here, and then our A, and this would be our B here, and that's our C. That's
Okay.
basically, yeah, it's that simple. We'd have
Mm-hmm.
that, yes. And then, oh yeah, did we check at the retracement how many percent it retraced? We check that. How many percent has it retraced? You remember? 70, 70.8. People, I should have seen this earlier because I would have made money off it because it took so many years to get here. So what we have now, we are going, kind of we have our 1 here. Now we have our 2 here. We have our 2 here.
Yeah.
Yes, this is our 2. No matter what happens in price now, all we know is that the European will be is going to be weaker than the Australian dollar. So what we are expecting now is always that the Australian dollar will be strong and strong and strong for the next, I don't know, 4, 5 years. Euro is going to collapse. Now you also pinpoint these things on Coral, the current situation that is happening in Coral. It's now starting to hit
Yeah.
hard Europe, right?
Yeah.
Yes, when it's now starting to hit hard Europe, this also can validate for you. Oh, Europe is being hard hit by Corona, and Australia seems to be getting better at recoveries now. You can even also check the detail. I'll actually send you something on WhatsApp about the corona something, about the recoveries and stuff. Also this thing has a corona item there where it shows the recoveries and everything that is currently happening. So basically Europe is struggling. As Europe is struggling, we expect this now to be a whole downtrend. It's just a whole big downtrend. Australian dollar will be strong. So now, when you start adding Hanzo strategies, what you could have
Yeah.
seen if you are a QML, you would have noticed that price was going to bounce around somewhere. You'd say maybe somewhere around this point.
Mm.
Would look for QML points around here. You remember left shoulder, this would be our low, our high, our higher high here, and then all the way
Yeah.
there's our low. So people would
Yeah.
mark that, and then this is our fail to return, FTR, where our one
Yeah.
is. Where one is, we always have a FTR. They call it fake out zone. Uh, Also, we can also take also this whole point as our FTR because we're already understanding what's going on. It's just a one, it's just a two, and inside this three is just another one, two again here. There's another three here, four, the zero float entry here. I can show them. Okay, let me just
Yeah.
not speak like that. Let me just show you again. We'd have our one, two here, our three, our
Yeah.
two here, and then our three maybe here, four, and this would be our five. This is a zero float entry. We can try to measure it, bottom point of wave one all the way to the top point of wave three, and we take it to the bottom point of wave two. Look at it, another sweet one. Even if we're to take it bottom point of this point, it would give us this one, and then it will extend to this one. But I'll also show you another way of actually, because of actually getting a pinpoint zero float entry. Remember, we have these one, two, three, fours, right? What
Yeah.
we know is that we are expecting price to be bouncing off around this zone,
Yeah.
right? So when
Yeah.
we're expecting price to bounce off that zone, what we basically do, we zoom in again, and then we try to draw other one, two, three, four, fives all the way inside here. Would have another a zero here again, another one here, another two, and then maybe another three here, and then another four, then another five, so that we can get that perfect zero float entry. Sometimes it's not. Sometimes the market maker makes it difficult to find it because they
Okay.
don't. They if it was that simple, everyone would be able to make it. Like we'd have billionaires all over the place. So sometimes they just
Yeah.
make it kind of difficult for you to see it. So let me just change color of this to pink. Yes, the other one, two, three, four, fives. We'll try to measure this bottom point here to give us a three. We're looking for three. Okay, our three would likely to be somewhere here where price is
Yeah.
retested. Yes, around here. Then we bring this thing here to give us a zero float entry. In fact, it is given a zero float entry around here where our three is. This was the initial three,
Yeah.
a zero float entry. You'd enter here, a sweet entry from this point. Remember, I said we have to wait and see what price does. So when
Yeah.
it gets to this point, you monitor the zone, even if it takes you the whole 2 days, because we're trying to maximize the profit. We're just trying to get in the sweetness. So you'd wait for it and see what it's doing until it creates to you this engulfing pattern like in king, another pink bar
Yeah.
type of thing. You see all these.
Yeah. Yeah.
After it is validated and given you something like this, you can go all in out in your profit. This is enough profit to go, I don't know. We'll start again this chart again later on tonight. Yes.
Okay.
So in this case, we'd
Okay.
have another zero float entry there. We have another zero float, and zero float entries, we see them all over the place. Yes. And we always just take profit always at the 23% or 30% point of it.
Okay.
Yes. And then now we now try to understand what price has done. Actually, we've tried to draw these Hanzo strategies and try to see maybe where price will bounce off. We have that first one, which is a QML. You'd understand in Elliott wave will validate for you that wave one is always 0 to 70%. So we'd likely say the 80% is very rare and the 100% is very rare for it to happen, especially in a monthly uh, and weekly type of view. So in this case,
Mm.
would like to take this one. You remember this FTR, the first FTR that it took? We now go
Yeah.
back here. What has price done? It bounced off straight off that FTR, which is exactly at the 70% retracement point of this wave two. So
Mm.
now what we know is that from this point, price is going down, right? We mark
Yeah.
here. Yes, we mark this point. Okay, let me delete that. Not delete, but let me just remove this red line inside. Yes, we have where C is, right? All we know is that
Right.
now around this point, price is going down. But as
Yeah.
price is going down, you have a 0 here, you need to have a 1, we need to have a 2, we need to have a 3, we need to have a 4, we need to have a 5. Don't worry about
Yeah.
these ones yet. Yes, we need to
Yeah.
have,
For the big wave tree.
yes, for the big, we need those things. So
Yeah.
in order, I mean, on our way to get there, we now do what? We go now to the daily, because actually we understand that from here, all we are looking for is just sells. We don't even care about the buys. Yes, we can buy from
Yeah.
here to here because it's going to retrace. It has created a 1 here. It needs to retrace for a 2. So we
Yeah.
can buy
Yeah.
from this point to there. But all we know is that we're looking for this perfect sell here that you can forget about.
Yeah.
You can actually open maybe I don't know, another account, like a small account for you whereby you put in maybe even $10 or even $100 or even $50, and then you can just put in your little 02s here. These 02s will go on for the next, just check this from here all the way to this 3 here. That is 23, 25% in price. That is crazy. That'll take the next 2 years or the next 3, 4 years. So what we're looking for
Yeah.
is this nice sweet sell all the way down. As for now, yes, you can look for a buy because it looks like it's going to be a nice buy for the next, I don't know, 3, 4 months. It looks like that because we're looking at it from a weekly chart. So we now go to the daily, try to understand what is happening around this detail that we have marked yellow. All we have is just a C. See here, we just have a 1. So if this is our 1, we try to measure what has happened here. Okay, let's just try and make this yellow kind of faint so that we can be able to play. Yes. In this 1 here, we try to measure it retracement. This is probably a decision point from here to here, exactly 38%. So now what
Yeah.
we have, we basically just have a 0, A, and then that's a B. We're expecting a C somewhere around the zone or around this line here.
Yeah.
Yes. So this is where we're expecting price to come. We could just put it, usually like we know our take profit is always the smallest. We want it here first. And the third take profit, we always want it here. So we missed a zero float entry from this point to this point, to that point. We can even try go on a 4 hour and try pinpoint that zero float entry. On a 4 hour, it would look something like this. One, ABC. Oh, this was a sweet entry, bro. This was sweet. I don't know how I didn't. Okay, I think I drew something like this too. But anyway, it would look like a 1 ABC, but coming somewhere here. Okay, let's look at it. We want to draw 1, 2, 3, 4, 5 inside this one. So we now go to, let's say, let's just check a 2 hour to see if it has drawn something. Yes, it has drawn something. Let's go now to the 1 hour. 1 hour, it would look like this. We'll even go to the 30-minute chart so that we can look at the 1, 2, 3, 4, 5 because we are looking for just perfect buys and perfect sells. We're not
Yeah.
looking,
Yeah.
yes, because we want to make money. We don't want to play jokes in this one.
Yeah. 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 Yeah.
Yes. So what it would look like would have maybe our 0 here, maybe our 1 here, our 2 is this one. We'll try to measure it here to here to here. If that's a 2, we have maybe, okay, Let's try and move it to the 1%. My goodness, 1% would be here. So this is our 3. You can see that I'm trying to put it exactly where. If this is a Fibonacci expansion, if it's here, it's at the 50% zone. You can see, right?
Let me see. Yeah.
Yes. Let's try zoom it so that you can see. It would be at the 50%, which is very wrong because we want it around these zones here, these 2 zones. So we take it now slightly so that it can cover that zone. And then now when it covers it at the 70, it gives us, maybe this is our 3, but let's try bring it down to the 100 and see what it would look like. If it's now at the down 100, it gives us this exactly as our 3 here at the 160
Okay.
and 261.8. So we'll now have this. Let's come here. We have now, okay, our 0, our 1 here, our 2 there, it's our 3, that's our 4. We have a 5 all the way down, down here. Would have our 5 here to give us this
Okay.
one.
Let us see if it was at zero float entry.
Yes, at 0 float entry. We take it, bottom
Yeah.
point
From
here, and then all the way to that 3. Remember, we are looking for it where? At the 100%. If it's 100%, it doesn't validate. Remember, they don't want us to pinpoint it, right?
yeah.
Yes,
Yeah.
they don't want us to pinpoint it. We now try zoom again to check if these drawings have been put in place. We check here, okay, yeah, it's at the 100%, okay, 100% here, okay, price is supposed to bounce there, okay, we look for it again. Now, if this is our 4 here, right?
Yeah.
This is our 1, 1, 1, 2. This is not even our 5. It's not done
Yeah.
going down. In this case, if we're to look at it in Elliott wave context, that means this can't
Yeah.
be a 1 here because it's not done
Yeah.
counting
Yet.
years, counting all these 1, 2, 3,
Yeah.
4,
Yeah.
5. So what we're
Get it. Get it.
expecting, yes, what we expect now, because we are looking for a 0 float entry. Okay, let's kind of
Yeah.
delete that first. We're expecting price to come around this point. What is here?
Yeah.
You see a bottom QML. This is a nice bottom QML here.
Yeah. Yeah.
Yes, you see from here, these are the
Yeah.
FTRs. An FTR would be here.
Yeah.
Yes,
Manipulation zone.
manipulation zone. Yes, whereby it's called a fake out zone also. Yes,
Yeah. Yeah.
whereby
Figure.
price will play around and you think it's a buy, it will go slightly then come down to this. So what we are looking for initially, we are looking for this zone. So no matter what price is currently doing up there, we can totally forget and let whoever enters and does whatever play around in that zone because, okay, let's try to, yes, we are looking for the zone here.
Yeah.
So you take your 5, you put your 5 here, you put your 1 here. So initially, Australian dollar, you also look, Australian dollar pairs have been very strong, right?
Yeah.
Yes, you are aware of that also. Uh, in this case, we just have another 1 inside here, or we can take this to say maybe this was just a deep correction, our 1 here, 2, maybe a 3, 4. This was a 0 float entry also.
Mm.
Yes, I can show you. 1, 2, 2 here, 3, 4, 5. Another 0 float entry. We look for it, take that bottom point of that, gives us a 3 there, take that as a 3, gives us here as a 0.161.8%. This zone. But we would have missed it because we wanted the pinpoint and it's slightly higher. You see now this point is now at the 101% already. We want it always
Yeah.
at the 1%, yes, because it gives us a nice sweet entry. Now let's try zoom in this detail to see that have we really put everything in line with where wave 2 ended and in line where wave 1 has ended. We zoom, look at this case. In this case, I've put this slightly overhead. We want it at the pinpoint. if it's pinpoint right there, and then if we take this one, we pinpoint it right there, and then we try to look. Has it given us the 1.6 exactly? You see, it gives us exactly a 161.8.
No,
This
no,
is a
no. What did you do now? What did you do?
no, no. Okay, let's go back. Let's just go back. Remember when I was just putting this?
Yeah, let me recap it. You
Yes,
draw it from one.
yes, to the top point of
It,
wave three. No, let's start it again. Let me just,
okay.
yes. Let me just do this. Yes,
Okay.
yes. We have this.
Because
I'll take this
okay.
as my 4.
Yeah.
Yes, right?
And we don't have a five yet.
We don't have the 5 yet. No, no, no. We don't. We are looking for that 5. We are looking initially we are coming down to this 5. We're coming
Yeah.
down to this 5. Yes.
Yeah.
But
Okay.
what price is currently doing is playing
Yeah.
around. Yes. So in this
Okay.
case,
So we are looking for another opportunity to buy or sell.
yeah, in this case,
So we have to count the Elliott waves again, all
yes,
over again,
yes,
in the
in the 1 hour
process
now.
of completing the
Yes,
five
5.
big wave.
Yes, yes.
Okay,
It
so you
works like that.
start counting from 4.
Yes, from 4. We're counting
Okay,
1.
so that is 1, 2,
This is it would look like a 0 here, right? 1,
yeah, 0, yeah,
2,
2,
and then
mhm,
3, and then 4,
4.
and then 5. That's the
All,
small
all
one.
of these are guessing. We are guessing
Yes,
that from
yes,
now.
yes, we're still guessing.
Okay, okay,
Yes.
great,
And
great,
then
great.
we
So we
take
have to
use the
measure it
Fibonacci.
to see if this it will be free over there or not.
Yes, yes.
Okay,
Because
great, great, great.
if let's say
Okay, you can move on.
yes, and then we take this bottom point there, top point here, there, it gives us what? This is a 3, right? 1.6 to 1.8, right?
Yeah, free.
Yes, because this 3 is valid because when it reacted here, it caused this.
Yeah,
It caused the retracement. So we have this as
yeah,
our
yeah,
4. Nice one, right?
yeah,
And then now we are
yeah,
looking for our 5, which is this one. Would now
yeah,
take this point, this top point wave, which was at 1. We now take it to the top point of wave 3.
yeah,
Yes, right? We said this is our wave
yeah,
3 at 1%, right? But
yeah.
now we are looking for the zero float end, which is always at the 161.8 or
Yeah,
sometimes at the 261. So in this
yeah,
case, we are looking for it around the 161.8. So we draw it like
yeah.
this, right? We draw a
You're
simple line.
right. Yeah,
So in this case, we can see, okay, it looks like we kind of missed it, but what we know is that it
yeah,
needs to bounce off straight off this.
yeah.
So what do? We expand the chart to see if these Fibonacci drawings were pinpoint at the bottom point of wave 4 here and at the top point of wave 3. We just try to zoom in.
Okay,
Yes, what we are doing
okay,
now, we are zooming in. We increase the chart size to see that this Fibonacci retracement, as you can see, it has surpassed here
yeah, yeah.
where it's supposed to be. It's supposed to be exactly there. And then we look for this
Okay,
one for the bottom
yeah,
point of 2. This is where
yeah,
2 is, right? You need to
yeah.
take this
Right.
point and put it exactly at 2. If it's exactly
Okay,
at 2, then we go check now again. Where is it? This one, it needs to be at 100%, right? Where 3 is. We say this is our 3 here. We put it right there. Now we come and check. Is it still? Okay, it's still somewhere around the zone. We try
yeah.
check now. We now look at it with this point. We take back this to the top point of wave what? Wave 1
One.
to check.
Yeah.
Where's our 3? Oh, it looks like our 3 was around somewhere this zone. So we slightly we mark here. We mark the zone. This
Okay.
is our initial 3.
Yeah.
But because of market manipulation, what did they do? They broke past this so that if you bought here, you'd be in losses all the way down here and wonder, ish,
Yeah.
this is
Yeah.
a
Yeah.
wrong trade type of thing. And then you enter, start saying, I think it's a sell. it goes here, it comes here, you re-enter, sell again, you're in profit, you are happy thinking we are going down, and then it starts going back up, eats all your money, you're wondering what is going on. That's how the market
Okay.
makers do it. Yes. So we
Yeah.
now take this point here and put it at exactly our theory, right? We
Yeah.
come, we watch. If this point is exactly at our theory, let's just bring it slightly. We are looking for, because the market is not as simple as we draw it or as simple as we say it. We slightly
Yeah.
bring it around this candlestick, which is here. We bring it
Yeah.
back again. We see, oh, is it still valid? Okay, still something is shorting. Okay, let's now take it back at the top point of this wave 3 to see now. Where is it? We put it now exactly at this wave 3, exactly pinpointing
Yeah.
it. If you pinpoint it on the wick, it will be surpassing this point. But if you
Yeah.
pinpoint it on the body, it will give us exactly this point. So
Yeah.
it's more of like you look for manipulation. When every time,
Mm.
once you know you have your zero float entry, when price starts to approach, all you have to do, you mark your zone. You mark your zone like this to say this is where price will bounce off without no stop loss hunting or anything. So when
Okay.
it comes around this zone, we monitor. Usually I find myself monitoring my trades from this point in. I start monitoring and seeing what's happening. And then it starts creating this, you see this candlestick, these ping bars and what. I start saying, okay,
Yeah.
ping bar, it
Yeah.
looks very interesting. Now let's start, we go now to what? Let's go to maybe a 4 hour and try to look at it in a 4 hour to see what it has done. It's just engulfing patterns. You can see it's a two engulfing patterns. This is why when you go to the 1 hour, you see uh these funny ping bars and stuff like that. It's just an engulf where
Yeah.
price it has created a supply around the zone. So we know
Yeah.
when you start looking at it with these contexts from, we'll start maybe at a 30-minute chart to see what has happened here. In a 30-minute chart, we look 30 minutes. Okay, what has happened? Okay, it looks like it has played
Maybe
around.
Doji.
Doji, you see these dojis here and all these things. Maybe something has come up. It has created a lot of indications that the price
Yeah.
around this point, just the zone here,
Yeah.
it wants to go back up. You see, you mark this point again, you say, okay, our price here is acting funny. So you start buying around the zone, start buying, you start with your 001 here to see what price
Yeah.
will
Yeah.
do. You see it, okay, it start going down. That means now you need to look for a better buy around lower than that 01 you entered. So you start
Yeah.
saying, okay, around this zone, this is where I can now put in my 05s, my 010s, and zero whatever around the zone. Once you have entered all these, price will now start going up. When it
Yeah.
goes up, you remember I said there's one, two, three, four, fives again. When it's going up, we have a one, two, three. We're going to count one, two, three, four, fives again in here.
Yeah.
Yes, it has a zero here, and then a one, and then a
One,
two,
two.
and then maybe a three, maybe a four, and then maybe a five. We're still looking for to see if maybe that's a three, maybe that's a four or whatever.
Okay.
Yes,
Okay.
and then here, here, bottom point. Where's our three? Our three is maybe around this point, but has it retraced
Yeah.
enough? We look at it. Has it retraced enough for us to say maybe that's our three? Or we look at this the detailing in this point. Is this detailing pinpoint? Where's that thing? You see now it's where at the 50% and all these other prices, which is
Yeah.
slightly not right. So we bring it down now to a 70% zone or 60% zone, or I think, or the 1% around the zone of the retracement, 70 or 1%. If it's like that, it will give us this as our three, and this is our four. If that's our three, we try to measure four to say, you remember, wave three is always 30 to 50%. We try
Yeah.
and measure. What has happened? It has bounced around the decision point, which is also still around the 30% zone. If price bounces off this point, then you know that you might be done with your wave four correction. This is why I say I hate really trading wave four, because sometimes it can even go deep. or
Yeah.
sometimes yes. So you just basically have to wait for the wave five. I call my strategy just waiting for wave five so that you can have a perfect entry.
Okay.
So we now try to measure the full margin entry again, the shadow entry. We take this bottom point all the way to the top of wave three, all the way to the top of two. We look for it. Where is it? Exactly pinpointing there.
With two. Yeah.
Yes, you see, exactly pinpointing. We have our zero float entry again here around this point.
Yeah.
You can check your stop loss. You don't even 30% price won't hurt you that much. If you have 4002s in losses, it's going to be altogether. It's going to be around maybe $20 loss or maybe $15 loss, which is something you can
Yeah.
hold for a whole
Yeah.
profit of this much. You
Yeah.
can hold for a whole profit of prices moved all the way 3%.
Yeah.
Yes, so you always have your sweet entries and everything like that. So in this case, what we are looking for, we said that this is an upside down, right? Count 1, 2,
Mm.
3, 4, 5. We try to measure
Yeah.
this upside down count with a Fibonacci retracement. But before we,
Yeah.
you remember when people draw, they will draw this. People would have never entered this one because they wouldn't have seen it. They would have done this. QML traders only without Elliott wave. They would have had this and maybe have this as an FTR over here, fail to return zone. It will now turn into a
Yeah.
fail to break zone. Okay, maybe they would have seen that also, but yeah. But mostly they would have wanted to enter at the top here.
Yeah.
Yes, so they'll let it come in this, no, leave it, it's going back up there. But now because you are a wave trader, you have now this understanding. From here, bottom of wave one, where is it? 70% zone. Simple. You mark this point first. I mark it with my yellow. I like my yellow boxes. I'd mark it with a yellow and say this point here. You see, even the creator, the Hanzos and the Mansu Saparis, when I was watching their charts, every time they marked this certain point, you see these two candlesticks. Every time
Yeah.
they appear most of the time in a trend, you mark them. So in this case, we have
Okay.
yes, we have this point as our 70%, somewhere here, maybe our
Yeah.
60%, or maybe here 60, I don't know, maybe somewhere here. So what we know
Mm.
that from here, all we do is sell. But on our way to this sell, we try to look at now because we want another entry, right? Because it looks like we missed this one, right? If we
Yeah.
miss, yes, we missed this one. All we know is that we are coming to this five, right? We try to count what is currently happening in this scenario. Would try to say if this is a 0, a 1 here, a 2 here, maybe a 3 here, maybe a 4 here, maybe this is our 5.
Yeah.
Yes, we're just checking, right? We're not sure. So we take
Yeah.
that, the fib tools, we check it from here to there. Where is it? Okay, somewhere around the 3. There's our 3, which is okay. We take that to here. Where
Yeah.
is it? Okay. It gives us an inverted to give us our 5 somewhere around here. But we now then again we check. Has everything been put pinpoint? This is slightly above. We put it pinpoint at the last zone, which is over there.
Yeah.
We check
Yeah.
2 slide zone. We check. Is it at 78%? We want it maybe at the 100%. Let's check. We put it down to 100%. If that's 100%, 3 is here. Let's check if it has.
Please, 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 please.
Uh-huh.
There
Yes.
you move Fibonacci now
Yes.
from
Yeah.
70 to
To
100.
200. Remember, I said Fibonacci. These are the two zones of it to look for this full margin. These two zones, 71 and 100%. We always look
It
for
is what?
this is the price. This is the point where we want our Fibonacci expansion tool to be at, to enable to find this zone, this perfect entry here. We take it. Let's do this. Let's take it back again.
Okay.
Yes.
Okay. So I don't understand. I don't get this point yet.
Yes, you don't get, yeah, don't worry. I'll explain it even more in detail
Okay.
with time. Uh, oh, my WhatsApp's now starting to ring. Yeah, in this case, we have a 0 here,
Yeah.
a point
Yeah.
to here to here, right? It'll give us
Yeah.
this as,
Right.
it gives us this as a 3, right? We have
Yeah.
our,
Right.
yes, our 3 is exactly at the zone. We mark this line. This is where our 3 is.
Okay.
Now we take the
Yeah.
Fibonacci expansion where
Yeah.
to the top of this point. Remember,
Yeah.
we always
Yeah.
want, oh, sorry, I moved 3. We always want it to be around 71.8 or here. So we always look at,
No.
if
No.
let,
No. 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 Repeat this phrase. We
yes,
want
yes.
what?
We want the top of the Fibonacci retracement to be around these two zones to give us a full margin around, around the 78% and the 1%. This is the two zones
Okay.
we use to give us that full margin entry there.
Okay.
So in this case, we are using the 78% at the moment, right? We are putting it pinned
Yeah.
exactly at this point. So if we put it exactly at this point, it would give us a 3 in this case here. It will
Yeah.
give us a 3 in this point, right?
This
But
will be 5.
yes, I mean, it will give us 5, not 3. Sorry for that.
Oh,
Sorry.
okay.
Yes,
Okay.
it
Okay.
will give us this 5, right? But then
Yeah.
again,
Right.
we take it from here. We want it also. We can check the 100%. We are checking
Okay.
what price is currently happening. We take it from
Okay.
here. We put it now at the 100%. If it was 100%, where would have price moved? Exactly at the pinpoint.
Exactly.
Exactly.
Yeah.
Yes. So you now know that
Exactly.
exactly at the pinpoint. This is a zero float entry.
I will master this thing.
You it's you see how simple it is, and it's very fun. Once you get it, you can
Wow. Wow. Wow.
you can never go wrong in the market. All you do is just this.
Yeah.
We're trying to get so if this is our 5, right? We measure.
Yeah. Right. Yeah.
We are
Yeah.
looking
Yeah.
first decision point. We want the first decision point so that we can take our pips and be out. It's almost at the first decision point. We try to measure. Okay, if I entered from here to here, how much price is this? This is exactly 0.70%. This is $100 with 402s in price. I can tell you facts only. From this point to here, that's $100 with
Yeah.
402. Now we know that we have two decision points, this point and this point, right? Where price can come and bounce off here. Now, once we have marked these points, now because we also know the QMLs, we also know the Hanzo strategies and all these things, we have now,
Yeah.
it's easier for you now to draw the QMLs
QML.
of this one,
Because
right?
there are QML over there.
Yes, you know where the first decision point is where price will react. So basically,
Yeah.
we draw this first one here, sweet QML. Sweet QML. People ask you, how did you know?
Maybe below that you can see below of, your QML
Here.
level.
Yes.
Yeah. There.
Oh, yes. Also, this, I'll do this also. I'd say,
Okay.
yes.
Great.
This is your first take profit is obviously around here.
Yeah.
Yes.
Yeah.
And then your other take profits would be around here because we know that there's a
Yeah.
QML. We know there's a
Okay.
QML. So you just wait and see what happens. And also remember, sometimes within these ABC corrections, there's also 1, 2, 3,
Yeah.
4, 5 waves within all these things, right? So
Right.
yes, let me just show you. Let's draw an ABC. Let's just say ABC, right? And then let's add in waves to these things. Yes. Within also these things, sometimes you also find in 1, 2, 3.
1, 2, 3, 4, 5.
Yes, inside the A
And
and
ABC.
yes, inside the B and inside the C also. You can find these
Yeah.
things, but you also learn these
Yeah.
things. Sometimes A doesn't have one, two, three. It just has one and then a two, a three. It would have maybe something like what they'll call, it has its own ABC inside again. It will have maybe an A and then a B and then a C. When you read the book, you'll come across stuff like zigzag correction, all these weird things. But I
Okay.
don't really care about these zigzag corrections because I have Hanzo and Mansu Safari strategies to validate
Yeah.
these things for me.
Okay. Okay.
Yes.
Okay.
So yeah. Uh, so we have this maybe as our A, right? So I
Yeah.
tend to look for one, two, three, four, fives in the A first before I can now start selling. All I know is that if I bought
Okay.
here, if you buy here,
Yeah.
that you
Yeah.
just wait. Your first time you get off the trade would be here. And remember again, what we
Yeah.
said is that we're expecting this to be we're expecting this whole one to retrace. This whole one here from here, this nice one here needs to retrace. Your first your last take profits will be around these zones. This is what we're expecting. There's
Yeah.
also another
Yeah.
QML.
Yeah. Yeah.
Another QML here,
Yeah.
special.
Because it will be a new 1, 2, and we will expect at the yellow
Yes,
that you draw now. It
yes.
will be two over
I'd
there.
have an A and then a B and then a C, which would be two here.
Okay. Okay.
Yes,
Okay.
which would be
Okay.
two. So this is what it would
Okay.
look like. You have something like this that would look like this. We have this first QML point. Oh, first QML
Yeah.
point, you'd be like, ah, this is a sweet sell. When you
Yeah.
sell this, you have another upside down QML. Here,
Yeah. Yeah.
price
Yeah.
will come down.
Yeah. Yeah.
Then B would be here. Then you go to your C.
Yeah.
C would be around maybe. C can also be deeper because we have QML points around here also. You
Yeah.
see? You see? Simple.
Yeah.
Yes.
Yeah.
So you know that price will likely end here, or price can take that top point. If we measure this, this is probably going to be our 70%. Look at it.
Yeah.
It's simple. 70%. You see? 7% zone. C can also
Yeah.
retest there or retest around these ones here.
Yeah. Yeah. Yeah.
And then I'd mark also this point. This point here.
61.
Yes,
60.
as
Okay.
61 because it's also special point where
Yeah. Yeah. Yeah.
the
Yeah.
where price is likely to retest.
Okay.
Yes, so usually I make my take profits here always, even though I know that price can come here.
Mm.
Yes, so what we have in this case, what we know is that our price from here is going up to this decision point here, and then it's going to come down, and then finish that, and then from there, coming all the way to this nice five.
Yeah. 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 Yeah.
Yes, we'd expect price to come here like this.
It's very good.
It's very, very
I
good.
swear.
You see, now
I will kill the market.
you kill the market, my boy. Now, all you know that you always know which QMLs to enter, which one is a safe one,
Yeah.
which one is
Yeah.
a valid QML, which one. Sometimes when you know that, okay, in this case, you know that price maybe is going to retrace. Okay, let me show you something. Yeah, let's say someone, you see, in this case, this was invalid
Yeah.
QML because we know that this is a 70% price won't come there. It will take the FTR at the 70 and come this way. In this case, again, price repeats its patterns. Trust me, it repeats the same thing. What it did here, it might do it also here. So price
Yeah.
might come here again. Because in this case, from here to here, it took the 70. Then from here to here,
Yeah.
it might take the 70 because it's just doing repeated patterns all over the market. That's what Forex is. Repeated patterns
Okay.
all over the market, just trying to manipulate people. Because
Okay.
yes, you see, simple stuff. In this case, someone would think, it's a downtrend, downtrend, start selling.
Yeah. Yeah.
Yeah,
Yeah.
you see,
Yeah.
they sell here, okay, they're enjoying their money. They start coming here, they say, you see, it's still a downtrend. When
Yeah.
it comes here, you know it's a buy. People still be holding
Yeah.
their
Yeah.
cells here. They still be holding their cells. Maybe they've moved, maybe they take profits slightly here, just to protect maybe their entry points that have done that, and then maybe
Yeah.
starts correcting. They start saying, no, wait, because there's a QML here. Let's move our stop losses back, and then it comes here. And it will come down here, do that, come down. This that's you see, it's a sell. Yes.
Yeah. Yeah. Yeah.
I'm still recording. Don't worry. So yeah, when it gets down here, people start
Yeah.
saying, you see, because we sold here, it's still going down. Let's continue selling. You enter more
Yeah.
cells, enter more cells. Starts going
Yeah.
back up, you enter more cells, but you're not aware that what it's currently doing, it's going to the C. It's going to create a 1, a 2, a
Yeah.
3,
Two.
a 4, and then a 5 inside again.
Yeah. Yeah.
And then if you enter these things without knowing that, without knowing Elliott wave, you start saying, okay, now it's coming here. You see, re-enter cell, cell
Mm.
comes down
Yeah.
here.
Yeah. Yeah.
Another one will
Yeah.
start, it comes back here, re-enter cell, re-enter. Because you
Yeah.
see another QML, you're thinking it will
Yeah.
validate this QML. Break past this QML, it'll create what they call a fake out V3. This is what a fake
Yeah.
out V3 is. It'll break past that. You start saying, oh my goodness, what is happening? Let's close. I think this is the wrong trade. You close, starts going back up. You start saying, I think it's a buy now. Let's start buying,
Yeah.
buy. Get to this point, they start selling at that QML. You wonder what's going on. No. Let's start. No, let's. It's funny how they do it. It'll come down
Yeah.
here, decision point, go back up. You start saying, you see, I told you, it's still a buy. Re-enter buy. Starts going up, bounce back. Wah! Take all your money. You start saying forex is
Yeah.
a scam. That's how
They don't
simple it is.
understand. As I was, they don't
Yes,
understand the
the
chart pattern
the
or
chart
maybe the
pattern.
market structure.
Yes, and market manipulation. That's all it
Yeah.
does. That's how simple it is. Once you get this, you mark your QMLs and now start saying, okay, I've marked my QMLs. All I know is that price will start bouncing off these nice sweet entries. Uh, Let me try show you a nice chart that I had already drawn.
Okay.
I shared it on the group. I think the beginning of the group. I think I left the group because I think people are using me, my friend. People
Yeah.
are
What they are
using me.
doing? What?
They're using me. They in this case I had said this was an ABC. It took this one as a B here, and then it took this as a C. It went even down here.
Okay. Mm-hmm.
So people in this case would have taken this as a QML.
Yeah.
You see? But all it did is just a
Yeah.
1, 2, and then a 3, and then a 4. We're still going up. We could start setting. This is a beautiful cell here, honestly. I can see it with the naked eye already here. What it has done is just a 0, 1, 2. We have a 3 around here, a 4, or even a 4 here. And then that's our 5. We take this as our 4 because it broke past this. We can just do this and then an A. You remember I said sometimes they manipulate the B to be long. 0, A,
Yeah.
that's a B, and then that's a C. They manipulate it so that they can take all your profits from here. So in this case, we try to measure them. Now we use the Fibonacci expansion tools here to here. It'll give us where a 3 here or maybe 3 there. You see around the zone. You just take that, we put it here. Where is it? Ha, smart. Do you get it? Here's the
Yeah.
100%. 100% is at the
Yeah.
3. Where's the pinpoint entry? At the 161.8 full margin entry. No need for stop
Yeah.
losses. No need for stop losses in this point. So what we just basically be doing, you measure from this point to this point. Where's your first decision point? Around the 60 and the 23% zone. This is your first decision point. How much is that in price movement? Here to here, 161.8. That's enough money to buy your Benz if you enter a big lot size. Simple stuff.
Yeah.
Zero float margin entry. We can watch this. You see where I drew this? We can watch this and just say, this is odd USD, right?
Yeah.
Yeah, we can just let it be and just watch it. It's going to do exactly
Okay.
what,
No problem.
yes.
No problem. No
Yes,
problem.
let's just, we're not going to edit anything. I'll show you this during the week. I'll just show you the confirmation. But look what it has done. You'll be shocked.
No problem.
Yes, I'm telling you, you're going to be shocked. Let's look for other ones. Odd JPY. I think Odd JPY did also the same thing. Also this. I long did this. I told people that along did. I'll show you even the history. I don't can if I do this. Can you see my WhatsApp?
Yeah.
Okay, if you can see my WhatsApp, let's just do this market. Uh, mm, you can just come here. I want to show you when I shared these things. Let's go to message here and then go down here. Okay, let me activate my phone. Okay. I wonder how long this video is. I wonder. Okay.
It doesn't matter now. So I started understanding.
Yes. Okay, I'm just waiting for it to activate the WhatsApp. Let me switch on the Wi-Fi for the phone. Can just do that. I want to show you because I actually did this like beginning of this week. I told people this is what price is going to do, and people are like, they don't take my trades, and that's what was pissing me
Yeah.
because these guys won't take the trades, and then when I take trades, people be like, "Bruh, I want you to give me signals." What do you mean I should give you? Like I'll be there like I posted it on the group. You didn't look at
Yeah.
it, and then now you're saying I should give you more. Is that fair? You see, I drew it from this point. This was on Sunday. The dates are over here. 22 March was a Sunday, around 6:30.
Yeah.
I think I was from playing
Yeah.
soccer and something. So yeah, I did that. All it did, okay, that's odd JPY. Let's go to odd USD. Here it is. We can compare this, and that.
Here it is. Yeah.
Imagine if you bought here, exactly where the arrow was, exactly where the arrow is. You buy here, that's a sweet buy for a very long time. You would
So
be in.
how did you count down?
How did I count what? This one on the right, or this one on the left, or this one on the left here?
No, this one on the right, the
On
one
the
that
right.
you predict.
Yes, this one. How did I count? I just started doing here. It retraced. Okay, let's remove this Fibonacci that is at the top here and remove this extension here. And we can remove this black line there and that one. And can remove that text. Yes. So I knew that it had to come down to a C. And then in this case of the C, I know that the next wave now, we're going to this 3 over here. And then within this
No,
3,
I don't get the point yet. So you count 1, 2, 3.
yes, all I did,
Well, maybe you do it on ABC.
you see this one here.
Yeah.
This is like the big ones, like the major trend where the major respectable price levels is always this one. Let's try increase
Okay.
it. Yes, let's try increase its size so that you can see it. Uh yes, it would look some. This is the main trend. This is the one that will
Okay.
give us where the 3 is, bottom point, top point of it, bottom point of it. It will give us this point as our 3. So all I knew is that price is going up no matter what. We are going to that 3.
Okay.
Yes, that's all I
Okay.
knew. And then
Okay.
I knew that from where price is from here to there. In fact, this is not an ABC because C is slightly did not come. If this is an ABC, C always needs to be the same point as A or break past it. So in this case, maybe we'd have our B somewhere there, maybe our A somewhere in between. We'll zoom these things so that you can be able to see also. And then maybe our C there. And then this could be our big one here, and then like a one which would have another A, B, C like that.
Yeah.
Yes, it would look something like this. If this is my one,
Yeah.
And then I was trying to predict. I'm looking for this three, right? We're looking for all the
Yeah.
1, 2, 3, 4, 5s to give us that three, right?
Yeah.
I'll take from this bottom point to this top point to here. Where's my three? This is my three, exactly at this 5. So basically, this is just the 3. And then from this 3, we're going to that 5. What we do is just take that all the way to this 1. Where's our 3? Oh, wow. 3 is actually slightly lower. So we'd mark here.
Yeah.
This is your perfect, we're going to sell here hard. I would sit here and say, I don't really care about what is happening here.
Yeah.
I'd be like, I don't care what this is doing because this is just manipulation. You might think they're selling big time, and then before they sell, they start going up. You're wondering, oh my goodness, what is happening? So my option is just here because it's going to create a big 4. A big 4 retracement would be, where did I put this 4? Oh yeah, here's the 4. A big 4 would be around the zone. So we measure because we want the best point. We want to get the best out of this from here to here. How much price? That is 4% in price movement. So we move
Yeah.
away from the little percent price movements and say those are risky trades. If at all we wanted to trade this, we should have traded the first. We should have traded around here. If we wanted to trade this, we should have bought here and forgot about it. So in this case, what we do, okay, let me remove these things. What we basically do, we measure bottom point of wave 2, which is here. I mean, no, sorry, no, not there, which is here, here, all the way to here, around the zone, right? We
Okay.
measure. First decision point, where we are going to take our first profit, here to here. That's 2%.
32, 32, 32.
Yes,
Yeah, yeah,
yes. That's 2% in price move. That is a lot of money, honestly, my guy. This is a lot. This is even, I think, if you sell from here to here, that's with 0.2s, that is close to 150 US dollars profit
yeah,
from here to here. So that's a sweet,
yeah,
that's the one that I'll be waiting for. That's the one that I would wait for and say, okay, I'm waiting for this one. So in this case, we'd have, okay, let me just finish drawing this. I say 1, 2 here, and that's our 3 here. This is our 4, that's our 5. Let's
yeah,
decrease the sizes. Subminute, let's change the color to maybe blue. Yes, it would look like this. This is where our 5 is inside here. This is
yeah,
just our
yeah,
3. Yes, so what we are waiting for is just this reaction. You can wait and come here, sell 0.10, 0.10, whatever you want.
yeah,
You're going to make money off this. Now, because we have measured this, we now come back to the left side and look for these QML entries. We increase the chart size and say, let's pull it down. We have these 2 lines here. We look now. Where's the this line? We pull it all the way to the end. Where is it? It's a QML here.
yeah.
Simple QML. People don't see these QMLs because they want
No,
this. They
you are
want
right. I
they.
will never see this QML.
You'll never see this one. You'll want the big ones, the huge ones there.
Yeah,
You don't
yeah,
see the
yeah,
little
yeah,
ones. So this is a
yeah,
sweet one. You take the smart QML. You see even this here. Then we come here. We zoom in. I want to show you a special. Look at this. This is a special point. These Hanzo guys, they mark this and say, this is the king entry.
yeah,
So what they have here, I'd reduce my size and stop loss and put it here and say, okay, I guess now my entry, zero float entry is around this
yeah,
point.
yeah, 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 yeah.
Then I know, from here, I'm going to sell big time. I can usually, I can forget about what is happening here. I say, okay, I don't really care about this now. Let's wait for this
Yeah,
baby here. We wait for this one here. Now, let me show you how much price movement I've predicted from here all the way to where price is currently at. Imagine
okay,
predicting 8% in price. Imagine,
okay.
imagine predicting that much. How much money would that be? That's a lot of money, though.
Yeah, yeah,
That is a lot of money. So
Yeah.
yeah, basically what I'm waiting for is now that cell top there. Yeah, man. I guess that is the end of this show for today. No, for now. We'll get back to the other one and we'll finish that Euro odd in the evening. I think it's now lunchtime in my country.
Yeah, 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 yeah,
Yeah.
yeah,
So let me
yeah, yeah,
just
yeah, yeah.
prepare some lunch for myself and see what to do. And then I'll,
Okay,
yeah, we'll talk later.
okay, okay.
Most
So
welcome.
after saving it, you can send it to me on Telegram.
You want this one?
I want all of the video.
Oh yeah, the video. Yeah, the video. I'll send you the video. Yes, yes, yes.
Yeah, yeah, yeah. The video.
Yes,
I'm
I'll
talking
definitely.
about the video.
Yes, I'll definitely send you the video and I'll try upload it also on my YouTube channel.
Okay, okay, okay,
Yes,
okay.
okay. No problem.
So thank you, and
Ah,
I really appreciate that. I
ah,
didn't see wave Elliott waves are with that eyes.
yes.
So I think I will master this thing.
Oh, yes. You need to master because this is the key to financial freedom, my guy. This is the key.
And it's so easy,
And it's so
according to me.
easy.
It's so easy.
It's so easy. Once you get it, you can never unsee it. Once you see these things,
Yeah, yeah.
you'll never unsee them, my guy. You'll always see these things all over the place.
Okay, okay, okay. Great,
Yes.
great, great.
See you later, bro.
Okay, okay. Thank you.
Most welcome. Bye.
Okay. Bye.